In the 1980s, interest rates in Canada hit over 15%. And boomers tend to say, oh, well, look how hard it was for us to buy a home. Okay, so let's look at the numbers. Because I was sent this CBC broadcast from Toronto mortgage rates in 1981, where the interest rate had hit 17%. Currently in Canada, even with the increased rates, we're sitting below 5%. For a $50,000 mortgage in Toronto at 15%, they would be paying $623 per month. What is that in 2023 dollars? A mortgage of $50,000 would be $162,000, and a monthly payment of $623 would be $2,017. The average mortgage payment in Toronto currently, when you include condos and homes, is over $3,000 per month. This is specifically talking about buying a house in Toronto. So that $50,000 mortgage, which would be worth $160,000, would be on a house that at the time was worth over $160,000. And if you had bought a house in Toronto in the 1980s for $160,000, it would currently be worth well over $2 million. Currently, a 2-bedroom condo in Toronto goes for just under $1 million. So I don't care that you paid 15 or 17% on your mortgage was peanuts. And also, wages adjusted to inflation have not increased since the 1980s. They've actually gone down in terms of buying power, meaning that millennials can actually buy less with their more money than their parents or previous generations could. Do not let boomers trick you into believing that they had it harder. Do not let their lack of financial literacy convince you otherwise. Because the fact of the matter is, it's more expensive than ever before in Canadian history to buy a home, raise a family, and especially to live in a city. Tag me in anything else you want me to debunk and follow for more.